Rogue Radar with Bill and Brian. We're going to talk about crude oil, natural gas. Lots happening today. We had a pretty steep drop off. Crude followed equities and just went straight back down and then popped back up. So we have had some recoveries on the equity side. One thing we're going to touch on today is going to be natural gas. It has broken through a resistance point at 835. And there might be some fundamental reasons why, and we're going to touch on those. So we are going to take a quick look. I'm going to cover rigs, and then I'm going to pass it over to Bill to discuss a little bit of storage. We have had an increase in rigs, and we are approaching levels that we haven't seen since prior to COVID. So we have grown quite a bit. On the Haynesville side, we continue to grow a lot of rigs. Those are going to be high rate, but high decline gas that's going to come online into the complex. But if you look, I mean, we are close to the minimums, and Bill's done some work on natural gas to take a look at it. We are growing natural gas supply. However, we are exporting 12.2 BCF a day via LNG and 5.8 to Mexico. So that is something that is super, super important on that. And the one factor that we need to take a look at is the impact of Canadian imports and what that's going to do. But Bill, what's on your mind today?
Well, just doing some basic math on how much gas we're seeing today. We're seeing the balance being that we have about 11 BCF a day that we can actually attribute to storage. But even at that, when you start doing that, we start getting to the withdrawal. By the time we get to the withdrawal season, we are actually roughly 200 million maybe, or 200 BCF below where we were last year. And so we got all this information on our charts out in the on Energy Rogue. I'm not going to get into too much of the details, but any kind of temperature this summer is going to change the gas outlook for the fall. So I think it's something we should be paying attention to. Just trying to get a heads up, take a look at it, do your own analysis. But I think we're going to have an interesting fall when it comes to how much gas storage that we have available.
Yep, I think you're right, and I think it is playing a factor. Anybody who has listened to me over the last 6 months to a year has continually heard a bearish outlook. However, we have not been bearish, and part of the reason why is that we have a higher elevated export capacity and a higher elevated export floor. So I'm still bearish from here. I think Bill is bullish, so we have a different opinion, and we encourage different opinions. Do your own research. We're not financial advisors, so read the disclaimer if you get bored. But we're here to help, and this is the Rogue Radar. And come see us for more. You can sign up for Market Minute for free. Rogue Lite is only $30 a month, and Rogue Edge is only $89 a month. It's a commercial grade analysis tool for the energy markets at a retail price. So thanks so much. Hope you have a great day and have a good one. Be safe.
See you.